Hey everyone, my name's Andy from Finding Value Finance. I'll be your host today. We've got Casper with us at UseLinkINV. You can find him on Twitter, also on YouTube. He's got a YouTube channel. I think you just opened up, you said a Substack page as well. Um, where do you find that?
It's the same thing again. Substack, uselink INV, or go to my Twitter page. There is the link. You can find it. So basically, what we do is roughly something like you, I guess. We are trying to find great entries in this commodity space, and yeah, I just opened it like 2 weeks ago, but we're definitely doing well, especially in the silver and oil space right now. That has been tremendous. So if you want to be a part of it, you can check it out. It's totally up to you. So.
Cool, cool. All right, so I wanted to get you on. I think you wanted to come on too, because a lot of events are unfolding right now in the technical analysis space,
Yeah.
and a lot of the things that we track in commodities. So, how about we start with the precious metals? We can start with gold and what you're seeing in the precious metals area in terms of charting and technical analysis.
Yeah, I think you hit the head on the nail there. I think that the last week has been the most busy week for me in the past, I don't know, many years. It has been a lot of action, especially due to silver, but we will look into silver. But also uranium, I think, has put in the low from this pullback. So there are a lot of buy signals across the board that we have to take care of. But yeah, gold. Let's dive in here. 1 second. If I can find the share screen, I think I can. Perfect. Can you see it?
Yep, we've got
Sounds
gold
good.
up.
We got gold. I think most of your viewers has seen gold, the breakout that we had roughly ever since February, and basically ever since it has been a non-stop journey, really. And that's typically what you see after we have roughly 3.5 years worth of sideways price action, basically doing that big inverted head and shoulders. So a lot of energy has built up in the system, and it's go time really. And what I'm telling is to basically buy every single dip that you can get here in this space. It's just tremendous. And but the big breakout was obviously at the 2020 high, connecting with the 22 and 23 again at roughly 2075-ish. That's when we had the big moment in time there, and basically we haven't looked back. Obviously, nothing goes in a straight line. There will be pullbacks. We all know that, and in my view, they are just buying opportunities if you want to add or if you're brand new to gold. And also from a longer term perspective, I think this is especially also factoring what happened to silver this week. I think gold right now is probably it's doing one of its final, basically it's like three up here in this overall 45 years worth of price action. We will see the big, very quick spike up for gold. And the targets for gold, I mean, many is talking only 3K, 7K, 10K, 20K. So it will be difficult to predict where we will end up. I have a target of 7.5. A lot of people that I talk to says it's too low. Maybe it is, but again, we're definitely into a big run here for the precious metals itself. And you can only imagine what that will do to the miners when we have, let's say, 3, 4, 5, 7K gold. They will do, again, tremendously well. Even though I know many people that have, thrown in the towel in gold and silver, and miners, that is, and say that they will never invest into gold and silver miners again. I highly doubt that when we get further down the road, they will be a part of it again. It looks extremely good here. But I think we're due for a short-term pullback, very short-term, nothing major. But again, I have that 2000 and 2,300, and we are now $30 above. So I think we are at that point in time where we could see a pullback. But again, sometimes after such a long consolidation, a chart, or in this case gold, it can take no prisoners, and it can keep going because it knows people are waiting for a pullback. And sometimes you don't get it until you get a lot higher up into the 2000s. So overall gold, I have no negative thoughts on gold, really. It's fantastic. It's incredible.
Yeah, and if someone were to say, do you want to play this with the physical metals? Do you want to play this with the gold miners? Kind of what's your opinions around that?
Yes, to both. You need, first off, when I started to dive into this whole precious metal space, which was roughly around March 2020, when I started to look into what the hell is, what is money, what is banking, what is gold, I would say just go into the miners. That's when you will make the big bucks. But lesson learned, I think you need to have physical first, have a amount that you feel great, that you feel is enough, and then you can deploy further capital into the miners, because that's where you will see the big gains. Obviously, you will have very good gains in the physical itself, but the big ones, the big 10x, 20x, whatever you can find, that will be in the miners. So both, you need both. You really do.
And I know another another thing that a lot of people ask me, and I can ask you as well. When we start to break in gold, like we've broken out, do you think we're going to get these big pullbacks? Do you think the consolidations are going to be big? Are they going to be short, where you're not really going to get a good opportunity to get like a lower price? I mean, I have my opinions around it, but what are your opinions on the consolidations and pullbacks in gold versus something like uranium or something like that?
Yeah, I think there will be a lot of pullbacks, a lot in quotes. There will be many pullbacks along the way. I think most of them will be somewhat short-lived. However, I do think at some point in time we will see some overall market fear that will kick in, just like we saw maybe in 2008, where you will have a deeper correction across the board, not just in gold, not just in silver, energies, whatever. So if we get that big fear in the markets and we will have a crash, that will pull everything down. And then you could see that 20-30% pullback. But usually gold is the first one to bottom out and then just have a V shape to go higher, because then they know more easy money is coming into the system to basically save it, just like we did in 08. So I think the pullbacks will be somewhat small. You can also see here, ever since we bottomed out, in early 2000s, the pullbacks they are not that big. It's like you can see, yes, it's 20%, but again, the overall trend is just up. So you need to go to the shorter time frames, maybe the daily, and buy basically every bull flag that you get, or whatever, how you do your technical analysis on the way up here again. So yeah, it will be a mix. I think that there could be a big one that will take everything down, but usually they will be somewhat small here. This is a big moment in time for gold. So yeah, that's how I see gold.
And I just want to make it clear to all the viewers too. We just broke out of a consolidation. So if you break out of a consolidation, that is generally one of the best times to buy something, is early when it breaks that consolidation. You don't want to wait until it goes way up and you say, oh, the price is up $500 an ounce. Let me buy it now. You want to buy it right on the breakout, generally. You agree,
Yeah.
or what's your opinions there?
I completely agree. I think when you have these massive breakouts, that's usually when you want to deploy as much as possible at that moment in time. And then later on, you can add in if you want to, but definitely the big breakouts, like the 2-year consolidations, whatever chart it is, that's when you should be deploying the most. And then you can have some plans. If we break out heavily and come down for big retest, then you have maybe the last 20% or whatever you want to play it. But definitely the big money that you want to deploy, yes, is the big breakouts where the price has done nothing for like a year or 2 or 3. For sure. For sure.
Definitely. So what do you have here?
I just wanted to show I don't know if we will get something like this, but this is basically just to see where we are. This is from the 1970s into the 1980s. So this is a 10-year massive move. And if we were to see something similar, you can see here we peaked out. It tagged the 100% measured move. Basically, that move there is that 100% measured move from the lows down here. And we overshot a bit. So again, if this is a replica, I don't know, but if it is, then again, you can see it again attack here at roughly 8K. And then maybe with a bit of overshoot, you can see 10K, 12K. Again, this is just based on that move there. Again, many people are talking for more depending on how we get there. So, but yeah, it's we have just getting started here. That's for sure. That is for sure.
So with that type of movement, I mean, you're talking, we still have, if we go to 8K or 10K, that's roughly 5-ish, 4-ish, 5-ish up from where we are today. And that in the mining companies, remember, they make all their money off the margins, and their margins are pretty thin, not super thin, but they're somewhat thin where we are today. And that margin expansion would just explode. They would make so much money if we actually get that type of price movement.
Yeah, exactly.
So,
But I think the downside is if we see gold going to 5K, 10K, oil will be a lot higher as well. So yes, they will get more from their product that they get up from the ground, but they also have a lot more heavy input costs that will creep up on them. So it's a bit of a two sides of the same story. But yeah, they will get more for their product. But again, diesel and all that good stuff will be also come at a higher price. So yeah,
I agree.
and that's also why you see them. That's also why you see gold miners breaking out now, because oil has basically, it's still at what is it, at roughly 85, 87, so somewhat cheap still. And now you're starting to see these big 10% breakouts here for gold. So, and oil is standing still roughly compared to gold. So now they are making more money. But at some point in time, I do believe that oil will come up as well, and that will obviously decrease their earnings and so on. But again, it will do no matter what. The miners here, there is definitely money to be made in the miners. There is no doubt about it, in my view.
What's your opinions on like the mining companies in relationship to gold itself? Do you have like a ratio? Is there anything that you watch ratio wise that you see potentially breaking a downtrend, breaking a basing pattern or something like that? What are you seeing?
I just removed some of the lines that I had one line on here, but again, I just wanted to say that looking back 15 years, the GDX compared to gold is just very cheap. I don't want to put any lines on here because it's a bit of a messy chart overall, but again, we are almost at the bottom. We are only 20% off from the bottom that we saw in 2016. But again, it looks like that again, and what I think will happen is that we're about to break up of this kind of structure here. Yes, it's not textbook, wedge pattern or anything. But again, I think we are seeing the big moves here, where gold miners will outperform the metals here for the next into the summer, basically, and then we will maybe stall before we go higher. But I agree, gold miners in relation to gold, very cheap. But the reason is also that they are so cheap is because gold has done nothing for the past roughly 4 years, while oil and all sort of other input costs, maintenance and salaries and all that has gone up. That's why the gold miners has done so poorly for the past 3 years, because they are basically taking up the same value, but their energy and their input cost has just skyrocketed basically. So that's why.
Good.
So they're cheap. I agree. They are very cheap.
So what about silver?
Silver, yes. 1 second here. Didn't I add silver? No. Okay, we'll go to find silver here. There it is. This one is a big one. Again, I think most of your listeners know that what has happened for the past 2 weeks, in my view, is something that you will see very, very rarely in your lifetime as an investor. I know people will laugh because it's silver, but it doesn't matter. This could be any chart. It could be Bitcoin. It could be the NASDAQ, whatever. It doesn't matter. This is one of the most long-term pattern that you will see. One of the most bullish. That's a cup and handle. And this is on a log scale. So don't get fooled by the low amount of price action here. This is a log scale chart. And basically what happened here this week and last week is that we broke finally the 2011 high. So we had basically, ever since the peak in 2020, we have made a massive inverted head and shoulders here, and that's it. We're breaking out. This is I'm a Dane, so I'm not going to hype anything because that's what we are as a Dane. But this is massive, and when a Dane says it's massive, it's a big one. And yeah, that's also why you have seen silver miners doing 100% in like 3 or 4 days and all that good stuff because of this breakout here on silver.
Yeah, so if you were just a normal person and they're watching this clip, and I know that we get excited when we see chart patterns that do this, how would you explain this to the normal person? Um, if you're looking at this big chart, we get a breakout, what does that actually mean? Like what, because in my opinion, it is such an enormous thing that
Yeah,
we just witnessed the
it
past
is.
week. Like, how do you describe that to the normal person of what just occurred?
I will give a bit of like a small story here. When I know this is not silver or commodities or anything, but when Bitcoin broke out, in summer 2020, roughly thereabouts, I told a few of my friends and coworkers, hey, you gotta buy Bitcoin right now because of this and that. And of course, they waited until we were at 60K and say, hey, this Bitcoin thing, is it still on? So again, I don't think unless you do this stuff, and you're very interested in technical analysis, it's very difficult to explain. It's also very difficult, even though if they buy, and you'll have like a 30% pullback in a silver miner at some point in time or in silver, they will not be able to withstand that because they don't understand what's happening. They're just taking your words uh, uh, and think, okay, he's saying something that is good. But when you start to see these big bullbacks, they will doubt it big time, and so they will not be able to fully, gain from what's happening. It will not happen. It just won't. So
Should I try to explain it in what I think or what I
of
could try?
course,
I'll try to explain it. And my natural language is English. I know yours isn't. So let me try to.
please
Um,
do.
so all these patterns are created by the herd, by humans interacting with each other in the market. And we see them on different time frames. We see them on short time frames, medium time frames, and long time frames. And this here is a 50-year chart pattern, which it takes 50 years to basically generate this pattern with the herd interacting with each other. And when you go and you look at silver, my opinion is the best entry points in my career have always been in full alignment with time frames. Big time frame, medium time frame, short time frame.
Yeah.
And with silver, and I think Uselink will probably agree with this, or Casper, we have a setup here which is like aligning, like we basically have this eclipse that's coming, and that's going to be, it's the same thing, like we're just waiting for all this alignment to come. And I think that we've got the alignment on time frame and we have the alignment on gold, and
Yeah.
gold's our leader. So gold broke out, and then you're like, okay, do we have alignment over in silver? And it's like big time frame, medium time frame, small time frame, breakout, breakout, breakout. And it's like, holy crap. So the herd is setting up on these patterns on all time frames, and when we break the short-term time frame, it can break the medium-term time frame and it can break the long-term time frame all in one shot. And when we see something like this is where you make all your money in your life or your career of doing this. It's like you wait for these patterns, and you can't sit there and be like, well, I'll just wait for it to develop for another 6 months. In my opinion, you have to buy the pattern. You don't buy the price action to justify it. You have to buy the pattern right when it's breaking, just like Casper said. So what's your take on that? You agree, disagree?
Yeah, I agree. Across the board, I think there's a lot of alignment. You're also seeing energy breaking out, XLE in particular. And I've always had, precious metals and oil energy is very much related to each other. So you're also having that part breaking out, meaning uh, that we will probably have more inflation within the next two years, and that's what silver and gold is reacting to right now, because they are front running this as always. So when we start to have the inflation 2 years in the future, gold will probably have a big pause, and people will say, "Hey, gold is not an inflation hedge, but hey, we had it. It did it, 2 years prior. It started because it knew what was coming." So I agree. We have a lot of very strong signs that this could, again, nothing is 100%, but I have this analogy. It comes from poker. I know if some of you is into poker. In my view, when you have pocket aces, you should put as much money into the middle that you can afford to lose, because you will win 80% of the time, but 20% of the time you will lose. And even though you lose in that particular hand, it doesn't matter, you did the right thing. And again, I think this is, again, one of these situations where you really have a high percentage chance of being right. So you want to basically put as much as you can afford to lose into the middle without hurting you. So if you lose here, for instance, it doesn't matter to your life, basically, to your financials. So yeah, it is a big one here. It's a massive pattern that we have broken, and I don't think this will be a failed breakout. I will be very surprised. Obviously, anything can happen, but given the pattern, given the time, the compression, it looks like the real deal. It really does. So
Yeah, I don't think there's I don't think there's a stronger signal that you could get right now and
no.
say that it's not breaking out. Like we've got all the signals, right? I mean, at least from what I can tell, everything is good to go.
Yeah, exactly.
Gold,
Exactly.
silver breakout. I mean, on and on and on.
Yeah,
Commodities.
exactly.
So playing this bull market in silver, do you buy the physical metal? Do you want to go after junior companies, producers? Because there's not too many producers. Like what's your opinions around there, and on how to play something that has a chart this big?
Yeah, I think there are two things to it. Again, I think you should have precious metals in your holdings. And at some point in time, when this is all peaking out, maybe 4 years, 5 years, whatever it will be out in the future, you will swap your silver into gold at some point in time, whether it will be at 20 to 1 or 30 or 15, whatever it is. But that's your play with your physical. So you hold your silver in order to swap it at some point in time. That's one way to play it. But also you have, I want to show you if I can find the correct chart here. This is basically, we can do GDX or GDXJ or SIL for that matter, it doesn't matter. But again, where you will make the big leaps from your personal finance, where you can really leap forward with regarding to your wealth, is the miners. Obviously, the miners comes with a lot more risk, because if you have a miner, they can easily at some point in time dilute their shares by 30% because they need to take in, I don't know, 15 million, whatever, and that will definitely hurt the stock. So you have to pick somewhat wisely. But again, if you spread it out on like 5, 10 companies, whatever you decide to do, you should be all right. Or basically just buy the ETFs. That's also a viable option. But again, here we are also breaking out here on the GDXJ. Right here we have a long-term golden trend line coming down, which hasn't been broken yet. So they are still lagging the metals. That's okay to have that done. And then we have this blue triangle here, goes back 4 years roughly, and it's breaking out right there. So we are very close to a big horizontal level to break out, but also here the golden there at roughly 40, 44-ish. So when we break that one, you have a 15-year breakout on the miners as well. I do think this one goes higher because this no, I think it's the high, excuse me, but so that's fine. So we're basically breaking out a trend line from the previous all-time high, and yeah, it's game on. It's game on for the silver salsa.
Yeah, I don't want to get it, people too bulled up here, but my opinion, and I'll bounce it off you, but my opinion is when I see that alignment of gold and silver and the patterns breaking out and all the different time frames and whatnot, if and guys, I'm not trying to, this is not advice, it's just my opinion. If I were to take risk myself and I saw these things break, that would be the time to take the risk. That's the way that I view. It's when you get all these things starting to break, then I look at the laggards. What's kind of lagging behind is generally like junior companies or something like that. And I find some of these
Sure.
lagging companies that are breaking their patterns because they all have patterns too. And that's the alignment, guys. Like I can't find this. so since I started investing when I was early 20s, we have never had this alignment in gold and silver mining companies and the physical metals all in alignment like this, where they're cheap and then the metals are cheap and then they're all breaking on different time frames to the upside. It's never happened in my life. And we may only get this opportunity once in our life, maybe twice, maybe, but probably just once. And I'm going to take advantage of it. That's what I'll say to that. So
Yeah.
what you've got, was that SIL or something?
Yeah, this is SIL, so this is the silver miners. You can also see here, again, trying to show this doesn't go back that far, only roughly 15 years. But again, you can see when the silver miners break, the structures, they basically go vertical for like half a year. Yes, we had the March 2020 here, but we were on pace pretty quickly. And right now we're breaking a 3-year long channel here with momentum, massive green candles coming in. As you can see here, the past 2 weeks candles has basically engulfed 2 years worth of trading. That speaks volume. That's insane. So again, fantastic. It really is.
Yeah, that is insane.
Yeah.
And when you look at the difference between like GDX, GDXJ, SIL, SILJ, which vehicle do you prefer at this time right now? Would you go into the bigger companies? Would you go into the smaller juniors? Like, what's your opinions there?
I think it's a tricky one. I think what we saw from uranium, if we were to take that into the mix here, we did see at the early stage of the breakouts, we had basically every stock doing well. And then we paused for the most of the miners, but actually the big ones, Cameco, Kazatomprom, what do you have, DPLO, I think it is, but you have the big names actually doing very well. But all the others, they went down. So I think it depends on where we are in the cycle. So right now, I think everything will get pushed up, and then we will maybe have like a pause for some period of time where the nano caps, the juniors, and maybe the mid tiers will start to pull back. But I think the big names will still hold their ground because they are making money big time here, whereas the juniors, they don't have a mine, for instance, and so on. So they're not making money in that period. So they could potentially drop down. So yeah, I think that could be something that we see here again, also in the silver miners, in the gold miners, when looking at what happened to uranium. So
Here's another question I have. Unlike, SILJ or SIL or GDX or any of those, do you think that this is like we're in one big bottoming pattern and that we could potentially break this entire structure to some ungodly level way above where we are today? So I know that says the top of the chart is around like $100, $90, somewhere in that range. Do
yeah.
you think that we could, like, this is one big bottoming pattern that we could just break and launch out of potentially,
Yeah.
or is that just too crazy?
No, I think this is, in my view, very clearly this zone here at roughly 50 is a big magnet. So again, we are breaking here. Yes, we have some smaller zone here. That's also some resistance. But again, hey, I think the momentum that we have built here for the past 2 weeks, it's going to go through it here. Not like butter, but it will clear it. And then, yes, we will hit the 50 again. And that's when I think we will see some sort of pause. But ultimately, I think we will go higher at some point in time. But you have to remember there's still a lot of people that bought here that is waiting to exit so they can basically break even. But also there will be people shorting at that point in time due to technicals, right? It's all shorting up here after such a run makes sense to have a 10%, 20% pullback, and then they will get out, and then we can go on again. So definitely, I think again, like I said with gold and silver, the miners is also very early, but they are a lot more erratical, so they're a bit more tricky to measure the pullbacks and so on. They're a bit more difficult, but yeah, I think also we're at least going back to the highs and then have a big pause and then beyond. But that's not this year. That's later on, in this decade. So
Any way we could quickly cover platinum?
platinum, Platy, as you as you call it. Where is it?
My boy Platty.
Yes, exactly. Platy is lagging here, and definitely also, you know, a lot of investors. I will say this: I don't think there's anyone looking at platinum right now because you have. I think uranium is doing quite well. You have the overall stock market still doing good, and then you have gold and silver obviously just kicking into gear. So I think no one is looking at platinum, and that's good, by the way, because we are for the past this. If you look at this pattern here, this is actually very, very similar to what the silver chart, what we have seen. So I think the same will happen here. I think we will break out roughly June to July. We will break that, you know, pesky 1,000 and 1,050, and then again, just like silver, it will be ready to go.
Unlike Donkey Kong.
Unlike Donkey Kong, yeah. And I do, again, I'm not into the fundamentals and all that, but I have heard many people say that the platinum market is way smaller than the silver market. So again, when people start to pile into platinum and the miners, I think there's only like 5 or 10. There's basically none. You know, there's just not enough stocks and liquidity to take that amount of capital coming in. So you will have these big spikes in the miners when it starts to break out here. Again, I don't know when, you know, where the cost, what is it, you know, when they are basically breaking even, if that is at 700 or 800, I don't know, but I think
no, it's based off of all of the platinum group metals, and right now they're doing cutbacks on production.
okay, you can see that. So they're not making money, right? So they need higher prices. Makes sense. So if I were to give one statement here for platinum, once we break just like 26.2-ish on silver was the big level to get through, I will say 1,050 in that range, you know, plus minus a few. That's when things should go way north for platinum. So,
and then one last one too. What about palladium? Might as well just round out these metals here.
exactly, palladium is a from a pattern point of view, looking at gold, silver, platinum, it's a very different beast. But I do think that we're actually trying to make a bottom here. This is actually the first bottoming pattern that we've seen in this falling wedge. So that we're talking 2 years. And but again, it's not the most pretty of them all. But I do think we're coming into major support here. You can see back from 2011, then you have 14, and you have 18. It's not perfect, so it's more like a zone here. And I do think that the low is set in here. And in my view, my thesis will get confirmed when we get back above 1,100, which is the previous high from 2001, by the way. So you can see here this falling wedge here with a big false breakout there. But ultimately, I think if we look at the daily here, it's a bit messy here, excuse me. But the daily stuff here, this right here is actually the first, you know, standard textbook, you know, bottoming pattern that we have seen for this entire wedge, because everything else has just been bear flags, basically. So it's just bear flagging all the way down, really. And this is the first one. So I think this is the first big attempt for Palladium to
try to base and bottom out, right?
exactly, to base out. Again, I know it's a more of a industrial metal and all that, but I think gold lift all boats, really. So again, breaking that 1100s, I think we're good to go. Also, then, I think there's
Let's go for it. Sorry,
I'm just saying here, you know, that again, if you look at it from a shorting point of view, the big shorting comes from early into the move, right? So that's when you want to short. This is the next one, and now we're actually at the fourth. You know, we had 3 opportunities to short Palladium, and still people I think are trying to short here because they're getting greedy. And at some point in time, the short fails, and then they have to cover. And there's a lot of people that has to cover in a small market. Yeah, you know what happens. Basically, you can see Cocoa, right? It has done the same thing. So yeah.
And then we'll do one last one. Copper. Quick read on copper.
Oh, copper.
If you got that one.
Yeah, I do. Copper. We also followed for a very long period of time. We were watching this huge falling. Triangle here, and then you can see that's actually quite funny, to be honest. We had a lot of noise coming in here, so we broke out And then yet not, we tested 4 again, retest 4, retest, and then finally we broke above $4, which is the big level, at least the way I see it. And then we retested it. Just look at the technicals here. Massive breakout, some sort of bull flag into the retest, and we are gone. We're gone again. So copper, again, full alignment with silver and gold. The downside is, in my view, 2 years from now, as I've mentioned, inflation will be on everyone's mind once again. But I think this is what I think we're calling it here again, from what we're seeing, that inflation will be very nasty here in the years to come, due to gold, due to silver, due to copper. So yeah. So copper, very bullish.
We can end this at part 1. Is there anything else you'd like to share about the metals or anything like that? Anything you'd like to add?
I think if you want to get into the miners, if it is in gold, copper, or silver, I guess now is the time. So if you have a miner that you fancy and it hasn't broken out yet, depending on what pattern you're looking at, I think when it breaks, I think you will have a very high success rate of being correct at that breakout. So again, have patience, and when they break the structures that you're looking at, you don't have to buy, but I mean, everything else right now is breaking out. A lot of miners are breaking out. So if there is one that hasn't done it, pull the trigger. That's just my opinion. So yeah.
Okay. Well, that's all we've got for the metals and miners, guys. We'll catch you in part 2 for energy. Thank you.
Energy. Bye.